What is going on, guys? Welcome to another market update. As usual, let's get straight to the charts. So it looks like we finally made it. After weeks and weeks of being in a frustrating crap market while everything else was pumping, Bitcoin finally reached critical mass exactly where we expected it to. We had a beautiful multi-support confluence from our previous half-year resistance turn support, the diagonal bull market trend line, and the 20-week moving average combined with the textbook 4-hourly bullish RSI divergence. While a lot of people became hesitant or even angry, we remained steadfast and kept stacking as many sats as we could. Bitcoin showed all the doubters how fast things can turn around by having an explosive rally from the depressing lows to the all-time high resistance zone in just 6 days, or less than a week. Now we have even breached the all-time high. While Bitcoin is absolutely slowing down with each subsequent market cycle, it has clearly demonstrated that it can still wake up from its slumbering sleep and move very fast when it needs to. Now let's look at our other charts and indicators to better understand the current price action. So when looking at the short-term liquidity levels, we do have a little bit of resistance in the 126k region or so. But when looking at the long-term liquidity pools, then we don't really have any meaningful resistance until the 130k level or so. So getting there should be relatively fast. Next, let's look at the CME chart. So we are currently pumping in the weekend, which may or may not leave a gap behind in the CME, but at the same time, these gaps are less important in the mania phase of the bull market because we can always come back down to fill them in the bear market. Or we could fill them immediately. Next, we're at DXY versus Bitcoin. So I've been very bearish on the dollar for a while, guys, and now we can see that Bitcoin is pumping to the upside again. So the dollar is clearly showing a lot of weakness here as well. Well, it's obviously possible that the dollar could linger on for a while longer. I do think that it will eventually come down to these lower levels, especially when you're considering some of these news about the dollar and the federal rate cuts that are probably going to apply downward pressure to the dollar. I'm going to talk a little bit more about this soon. When looking at the unemployment rate, then you can see that we're still hovering around the 4.3% mark, and we don't have to worry about it too much until we reach the 5% mark. And by that time, Bitcoin could already pump by a lot. Most of you probably know that the Fed decided to have another rate cut on September 17th. So we are starting to move down here faster now. And if we were to have a recession, then that could happen toward the bottom end of this rate cut cycle. But hopefully we'll be able to avoid it. Now let's look at some news. For our first piece of news, we have this report that calculated how much money stablecoin issuers will start losing now after the Fed's September 17th decision to make the first interest rate cut in a while. So stablecoin issuers like Tether have been making a killing in this high interest rate environment. But as the market ebbs and flows, so do the finances of stablecoin issuers who park investors' cash in treasury bills and other low-risk assets to make money for themselves. The total market cap of stablecoins recently reached $293 billion, representing 3.44% monthly growth, marking 2 full years of uninterrupted expansion. However, the first federal rate cut to the 4.0 to 4.25% range will now slash $500 million in annualized revenue from the various stablecoin providers. And that's just the first rate cut. This lowering of the interest rates will initially most likely also provide some nice upward pressure to Bitcoin as the dollar resumes its never-ending death spiral of debasement. The next story is also related to stablecoins but a lot more important. Namely, governments like Russia and China have caught wind of America's plan to debase the dollar. This has already been clear for years due to the dumping of US debt and stacking of gold that central banks all around the world have been doing, as evidenced by the massive rise in gold's value. However, instead of just printing more money like Russia's economic advisors are thinking, the US is planning to do something a lot more clever through the use of stablecoins. Namely, they're planning to effectively expand the money supply by allowing their previously sterile reserves to back stablecoins now. The great thing about stablecoins from the perspective of the US is that it forces others to buy US debt, because stablecoins are now required by law to be backed by cash or US treasuries. Treasuries generate yield, so those are the obvious choice. Other countries with unstable currencies have been gobbling up these USD-pegged stablecoins for years anyway, and this new legislation would just facilitate the ongoing trend. So while other governments are dumping US debt, private citizens and companies from these and other foreign countries are buying it back up. The activation of previously locked up dollars now in the form of stablecoins will obviously cause massive currency debasement yet again, but as long as the dollar still remains stable enough for there to be demand for dollar-backed stablecoins, everything would still go according to plan. The current US administration probably thinks that this plan is the best way to reduce its massive $37 trillion debt, while minimizing unrest. Obviously, all this is massively bullish for hard assets like Bitcoin and bearish for the DXY. I recommend watching this fascinating video by Mark Moss to learn more. For our next and last piece of news, we have the sudden change in sentiment that we are experiencing now that we have had this explosive rally. Articles with price predictions are starting to pop up again, and people like Plan B are gaining more confidence in their ridiculously bullish price predictions of 500k or so again. While these lower predictions of 200k or so are obviously much more realistic and even what the full power law model theoretically projects under ideal circumstances, we still have to be careful and get closer to the end of the cycle to see what kind of volatility Bitcoin is able to pull off in a sustained fashion. I'm very confident in the possibility of achieving much higher prices than we have done so far already, however. Let's get back to the charts now and look at the M2 money shift for Bitcoin. And as you can see, Bitcoin is finally starting to catch up to the money supply. And we should be bullish for a couple of months at least, because even if this over here were to stop dropping and we had some sort of bear market in the money supply, Bitcoin, as you know, follows the money supply with an 80 or so day lag, which means that we should be golden until early December at least. Now let's look at the S&P versus Bitcoin, and what have I been telling you guys? Bitcoin is finally having that catch-up rally to show the S&P who's boss. The more Bitcoin diverges from risk-on assets, the more aggressive the bounce back will be as well. Next to the Fear and Greed Index, and look how fast the Fear and Greed Index has recovered from the bottom. But the good thing is that it's not overly greedy just yet. Technically it's still in neutral territory, and the previous high was at a much higher greed level, so we could still go a lot higher here while not being overly greedy. We're looking at Google Trends, then you can see that this recent pump has barely affected the price at all. So I do think that we can get much higher before we actually top out. By the end of the cycle, we can probably go above 50 or so. We're looking at Bitcoin dominance, then you can see that we have actually had a little bit of a pump over here, which is quite common. Because when you look at these other market cycles, then you can see that Bitcoin typically has had this last dominance pump before the dominance completely falls off the cliff, and this happened in 2017 as well. So it doesn't have to happen this time, or this pump could be smaller, who knows, but these kinds of rebounds are quite common. By the end of the cycle, I do think that the dominance will drop more. The crypto total market cap excluding BTC has finally reached new all-time highs as well, so I do think that this can continue pumping for quite a bit higher before we reach the top of this cycle. Ethereum's price action is telling the same story. We just barely reached a new all-time high over here, and it's currently consolidating in what seems like a bull flag formation. Alright, back to Bitcoin. So as you can see, Bitcoin is currently experiencing a little bit of a dump, which is completely normal after such a crazy rally. And we will probably have these very fast dumps all the way to the new market cycle top, because Bitcoin cannot just continue going up forever. And these are nice opportunities to buy some more Bitcoin. Razor, it looks like you finally have that opportunity to buy back in cheaper after you sold. October is turning out to be very bullish indeed, as expected, especially considering that we had a bullish September, which has always coincided with a bullish October. When looking at the Octobers of the previous market cycle tops, then you can see that we've typically had massive returns during Q4. And this was also the case for 2021, as you can see, even if there are slightly diminishing returns. And we're probably not going to reach these types of percentages, but even like 20 or 30% would be amazing. Q4 is going to be very exciting indeed, so buckle up. As always, if you could help out with subscribing, liking, and commenting, then that would be very much appreciated, because these videos take a long time to make. Anyway, this is Saverio speaking, and as always, thanks for watching. You guys know my stance on the importance of self-custody. However, there are situations where you need to use an exchange for trading or as a crypto on and off ramp. There are also plenty of people who should still reap the benefits of owning Bitcoin, even if they don't have the technical expertise required for self-custody or exchange-based trading. This is where today's sponsor, Caleb & Brown, comes in. There's nothing more infuriating than having your money stuck on an exchange and being met with an AI chatbot instead of real customer support, which is often lacking as exchanges try to cut costs. Caleb & Brown, based in Australia, solves these problems by storing your crypto in cold storage, eliminating hidden fees, and assigning you a dedicated broker to assist you personally. You can even call your broker to execute a trade for you while you're relaxing on a beach. That's how easy it is to use Caleb & Brown's services. Use the referral link in the description to sign up now.